they've created an environment of distortions of a magnitude that is so great, it is extremely difficult to get your head around.
Hello, everyone, and welcome into CrushTheStreet.com. A first-time guest today. His name's Gregory Mannarino, and his website is traderschoice.net. Extremely intelligent technical trader, as well as someone who has a deep understanding of the global economy, U.S. economy, and fundamentals. And he's here to help us make some sense of the crazy volatile markets. And the markets sure have been volatile. Intraday trading today has been the Dow has fallen more than 500 points, and right now it's come up since then. Oil is in the $26 range, and markets around the world are falling. So, Greg Mannarino, thanks for joining me today.
It's great to be here. Thanks for having me. I really appreciate it.
Greg, I'll start you off with this. Is it safe to say that we're in a bear market?
Well, I would have to follow that up with this. We saw the top of this market in May. I was actually the only guy, you might even know this, I can say this with certainty, the only guy who called the top of this market almost to the day. At that point. A video of that is actually on my website, traderschoice.net, where I told everyone this was more than likely the top. Well, we've seen the market steadily decrease since that time and take a wallop. Since the beginning of this year. As you know, this is the worst year for these markets, the worst start to a year in history. That says a lot. So are we in a bear market at this point? Well, I would have to say we are, because I can't imagine what is going to push this market back up. Again, I don't know if you follow my work that closely. However, I had said at the end of last year that this market was actually looking a little bullish to me at that particular time, because we hadn't yet broke through several technical barriers, which we have breached big time, not once, not twice, more than 3 times. So my outlook has clearly changed here. Something very ugly is lying underneath all this here. It's not just the plunging price of crude oil. A lot of stuff in play here, weighing on these markets. And,
what was it in back last year when you were calling the top? What was it that you saw that indicated that we were gonna fall? Because as of now, we can point to things like China, the Fed raising interest rates. What were you seeing back then that was giving you this indication?
The Dow transports, specifically the Dow transports. I spoke about that. I said, look at what's happening here to the Dow transports. Something has to give. And, I follow the Dow transports as one of the things that I like to keep track of. And it was just looking so bearish to me that I said that the market's going to follow. And it did within days of making that announcement. Again, we're in a situation here where I don't believe people are understanding the gravity of. We are in a global slowdown. We're seeing what's going on everywhere. World central banks have gotten increasingly desperate to try to pull demand from the future by printing cash out of thin air. All of this has to balance out. They've inflated bubbles across the spectrum of this market, the biggest of which is debt. By inflating debt, they have created a bubble in the stock market. Are we seeing that bubble pop now? We very well may be. I can't see a scenario, at least at this point, where the market is going to make a major rally higher and overtake the highs that we saw in last May with regard to the Dow Jones Industrial Average. There's no drivers here. So with that said, what can we expect moving forward? I think it's going to get uglier. I don't believe we're at the bottom with regard to crude oil. I don't believe we're at a bottom in this market by a long shot here. Today's volatility in the market was unbelievable. We saw the Dow Jones Industrial Average down 566 points at the low. It tried to make a rally towards the end of the day. It was down only about 100 points at one point. We finished down about 260. I don't know who's buying there.
Yeah.
It raises a lot of red flags to me. Who would want to jump into this market not with all this uncertainty? I think it may be some kind of a trap. I wouldn't be surprised to see this market fall tomorrow. I really don't. I don't know what could have caused that kind of action in this market all at the same time. It's very suspicious to me.
Greg, and I'm wondering what the Fed's going to do now, because it seemed like the markets reacted pretty instantly from the rate hike. And I'm not saying that that was exactly the reason why we're seeing all of the markets, kind of fall at this time, but it seems like that is definitely going to have an impact on their decision going forward. Do you have any thoughts on what the reaction will be to the markets essentially melting down across the board?
Well, let's just start off with this. The Federal Reserve has apparently raised the federal funds rate, as you know, 25 basis points. The market is not buying it. The rates have dropped. The 10-year today, the U.S. 10-year dropped below 2%.
Mm-hmm. They've lost control at this point.
They've lost control, either that or they have done nothing. I don't have any inside information to see has the Fed actually, what have they done? What besides raising the federal funds rate supposedly have they done to move this monumental amount of cash and debt in such a way that it'll affect the markets? They can't just do this.
Mm-hmm.
What people need to understand is the Federal Reserve is not magical. They don't possess any godlike power. They can't just say they're going to do something. They have to get into the markets and make it happen. I don't personally believe they can do it. I don't think we're going to see any real change to the upside, because we haven't seen it yet with regard to the interest rates. Mm-hmm. As a matter of fact, I spoke to a couple of people today. They're saying, Greg, what's going on? The interest rates are dropping. Well, the Federal Reserve has probably done nothing. I don't think they can do anything. And I'll tell you something else. We've seen these world central banks get so desperate in parts of the world, they've gone negative. We have real negative rates here in the United States as well. Look, they've created an environment of distortions of a magnitude that is so great, it is extremely difficult to get your head around.
Greg, ask you about this. It was interesting to actually see gold go up today with markets melting down. I'm curious as to your thoughts on the dollar, though. Mm-hmm. With stock markets selling off, do you believe that people will go into U.S. dollars and the dollar will benefit from markets essentially melting down in 2016?
Well, that usually is the trade, isn't it? Where people run to safety. I don't think we're seeing that play out as much as you would expect in this environment here. The U.S. dollar, along with every other single fiat currency, is an unbacked liability being dispersed by a bankrupt government. The value of the debt is zero because it can never be paid back. All of this, every single thing that has been created, or every distortion in this market, and it's not just equities, it's currencies, it's debt as a whole, which includes currencies, obviously, the precious metal markets, all of this is not real. It is completely disconnected from reality. Not one single asset class has a real price discovery mechanism associated with it at this time, not one. So what does that mean moving forward? Everything that we're seeing, every single thing in every single asset class is going to change dramatically. The price will correct to fair market value. And going back to what you were saying with gold, we are going to see a moment where, again, this is going to melt up along with silver, which is, again, I've been saying this forever, the most undervalued asset in the history of the world. Mm. So as a long-term investment, that's where people need to be. They need to be betting against the global debt, which can never be paid back. The value is zero. How do you do that? By holding a hard asset. You need to become your own central bank. That means holding a hard asset. Giving the world central banks back their unbacked liability, that is these pieces of paper with numbers printed on them that everyone believes is real money. It is an absolutely twisted system. that again is going to balance out. And just like the Federal Reserve and the World Central Bank actions, by stimulating and printing and quantitative to do, all it has done is attempted to pull demand from the future. They haven't created an environment of everlasting demand. They've just pulled it forward, and that will balance out too. So are we at that inflection point? Are we seeing it play out in the markets? Again, this is the worst start to a year in history with regard to these markets.
Greg, do you see China continuing to be in the headlines in terms of their economy contracting and the slowdown that they're seeing over in China that has kind of sent the ripple effect into the rest of the world? I mean, that was the headline news January 4th, the first trading day of 2016, and they kind of set the tone for this new round of sell-offs that we saw. Any thoughts on China?
Absolutely. They're in the same situation here. What have they done? They pulled demand from the future. Who really knows what's going on over there? But there's no doubt in my mind, at least, that they are slowing, along with the rest of the world. The United States is not immune, despite what comes out of the mouth of President Obama at his State of the Union. This is a situation in which the money velocity here in the United States is near a historic low. That is the rate at which cash is moving through an economy. We have a labor force participation rate near historic lows. You cannot have an economic recovery, and I've been screaming from rooftops about this for years now, without those two metrics moving up. You cannot have an economic recovery. The United States, again, is not immune to what's occurring around the world. The markets are completely distorted from reality. Dow 6,000 would be somewhere closer to reality. Dow 4,000 is probably more realistic. None of this is real.
Wow.
It is going to correct big time as we move forward here. People are going to be suffering financially in ways that they cannot believe moving forward here. Again, this environment of distortions will correct to fair value.
Greg, in your thoughts, I mean, I know ultimately the fiat currency system isn't going to work. The central bank system, it doesn't work. And you brought that up with, the money that we have just being debt-based. But what about your thoughts on which countries are falling the fastest at the moment, and will that benefit the other countries which are not falling as fast in the short term? I guess I'm alluding to potentially the U.S. being that safe haven, not falling as fast as, let's say, a China or a Europe potentially.
Here's what I've been saying for the longest time with regard to the issue. No nation on earth is immune to the global debt bubble that we are in. And it is not, I can't stress this enough. This is not just a financial problem. What we have done here with this debt-based economic model is pull resources from the future again to support the now globally. All of that will balance out too. As this debt bubble bursts, and it is going to burst, there's no doubt about it. How do we know it's going to burst? Look at every single economic and financial bubble in history. Without exception, they all burst. Why? Because they rise above a level that can be sustained by any means. So you can have world central banks whose product is debt, period. They need to keep borrowing cash into existence in perpetuity in greater and greater amounts to sustain the now. This is a clear definition of a bubble. So what's going to happen when that bubble bursts globally? It's going to create a resource problem, and we are going to see a correction in human population along with the debt, because the debt has sustained and allowed the human population to grow, is going to correct as well. So we're going to see a loss in human life on par with a nuclear exchange at one particular time. That's how bad this is.
Wow. Greg, any thoughts on the 2016 election? Is Trump going to win this presidency and rescue our $19 trillion debt problem that we have?
No. No one can. We are way beyond the point of anything being fixed here. It cannot. We passed that point a long, long time ago. The decisions that would have to be made, the United States would have to be a third world country. No one will accept that. There's going to be a complete collapse of the system. I don't care who's in the White House. Nothing. Look, whether it's Donald Trump or whoever else it's going to be, these people, all of them, are having their strings pulled by the Wall Street banks, by the world central banks. That's it. These individuals, doesn't matter who they are. It's all going to end the same way, and it's going to end badly. There's no saving this. There's no way around this. All they can continue to, they can't stop inflating the debt. It can't stop. It's the mechanism of the system. It has to continue in perpetuity. Can never stop until the breaking point. And
we're having a diminishing returns, though, on this ever-increasing debt. Of course, the earnings are going down. The ability to profit off of the increasing debt is dropping, but the debt is getting worse and worse as each year goes on in an exponential form.
Absolutely. That's exactly what's happening. And it's only going to get worse. What's going to end up happening here, and why I'm such a long-term proponent, and I have been forever now, wasn't for years, with regard to precious metals, is, again, the value of the debt is zero because it can never be paid back. So once the central banks continue their debt expansion scheme and continue to inflate this bubble, which will burst, you can only imagine what's going to happen at one particular time. Again, the free market has not been allowed to determine fair market value for debt. It's been stimulated by world central banks. So when that moment is realized, we will see a spike in interest rates, which is going to shock the world, which is going to put a major amount of pressure on equities, which will sell off rapidly. We'll get a concurrent selling of debt, of equities, and all this cash. Again, another thing I've been saying forever, does not just go to money heaven. It's going to look for some place to go, and it's going to go into hard assets, in my opinion. I mean, I can't see another way around it.
Greg, you brought up something a while back, a minute or two ago, and you mentioned the velocity of money and it being at all-time lows. And, of course, that's why we haven't seen, inflation in the terms of what we're paying for in too much at like the grocery store and things like that. I mean, obviously the numbers are manipulated. We've seen inflation in things like the stock market and assets, real estate, things like that. That's my little disclaimer for that. But will we see velocity? If we do see the velocity of money go up and increase, will that be hyperinflation? I mean, if all that excess liquidity that's sitting on banks' balance sheets really enter the markets, I mean, is that really what the Fed wants to happen?
Is it what they want to happen? I think they're going to try everything they can to control it, but you're absolutely correct here. That's just why we're in this environment with the money velocity at historic lows. Once this starts to move, people have to start to wonder what is going to be the ramifications of that. And one of them is clearly a hyperinflationary event here. All of this liquidity, like you said, is floating around the world here. What's going to happen when it starts to move? You can have all of these extra dollars chasing the same amount of goods. The same amount of goods hasn't increased, but the amount of bills has increased. So all of these are going to chase the same amount of goods at one particular time, and you do not have to be a rocket scientist to figure out how that's going to play out. It's going.
But yet, that's what they're going for. They're trying to get this money to move.
Well, they're trying to get this money to move, I think, but again, at the same time, they're stuck in a bad situation where when it does move, there is a great possibility that they can lose absolute control of the situation, and we can see a hyperinflationary event here. We're seeing this deflationary event in oil for many, many reasons. Again, the hyperinflationary event is going to be when the movement of money out of the debt market. That's what we're going to see, the movement of money out of this bubble in debt, which is the greatest threat to humankind. Once that money starts leaving the debt market, we're already hearing about it now. The debt market's in trouble, low-quality debt. And again, that's going to put pressure on equity. It's going to have an inverse effect. We've seen the effect of low interest rates here on the market and inflating it, or the effect of high interest rates, again, when the market is allowed and will do, its sole job to determine fair market value for debt. It'll put pressure on equities, get an absolute inverse effect, and all of that cash will start to move big time. It's going to look for somewhere to go, period. That's where we're going to see this. Not going to be consumers going out there all of a sudden spending money. They don't have it. People don't have it. It's the money in the debt bubble that is going to move.
Greg, that's significant information that you're putting out. You're telling and you're warning people essentially. If I can ask you to encourage some people and just kind of share your thoughts on what you're suggesting for how people can profit and or survive and thrive through this situation, what are you suggesting for people to do at the moment?
Number one, open your eyes. Look around you. Look around and see what's actually going on. Just disconnect yourself from the mainstream nonsense. Pay more attention to channels like yours here, this show, and you'll get a real picture as to what's occurring here. Try to think of ways that you can preserve your wealth. And again, to me, that means becoming your own central bank and betting against this debt, and getting yourself into a hard asset. Take advantage of what is going on right now with regard to precious metals. I can't tell you what an advocate I am, and I'm sure you know, of precious metals. I have been for many, many years, and I will continue to be moving forward. You have to bet against this debt. You got to understand where this is going to go in the longer term, and pretty much come up with a plan as to how you can attack it. With regard to people's investments, their 401k plans, most people have a very rudimentary understanding of how money works. I would suggest this. I have an absolutely free, no strings attached book I wrote. It's called Ultimate Guide to Money in the Markets. It's available right on my website, traderschoice.net. Go to the equity list page, scroll down, and just download it. Just download it. It's absolutely free. I'm not asking for a thing here. And if you read that, you will have an understanding of how money works. And again, have a better idea of what you need to do to protect yourself.
Greg Mannarino, everybody. Greg, thanks so much for taking the time to come on the show with me today. If you want to reach out to him, check out traderschoice.net. Greg, thanks for joining me.
Great to be here. Thank you.